Good morning and welcome to my weekly real estate market update. Hope you're having a fantastic day. Lots to unpack in this week's blog, and I won't get cluttered down too much into the detail, nitty gritty. But really, again, I'm talking about supply and demand because it seems like it's a continual conversation that's coming up in many of the blog articles that I read throughout the week, that supply is just not keeping up with demand. However, it seems to be light at the end of the tunnel. There seems to be some level of balance coming in. Now, an interesting article I read recently, around southeast Queensland, they expect the population to grow by about 2 million by 2046. So that's a population increase of another 2 million. And they say to keep up with that population growth, we will need another 900,000 homes. So that equates to about 4,500 homes a year. Now, last year alone, there are only approved lots of about 1,800. So we're way off the mark of keeping up with that population growth and demand. So it shows to me that perhaps this supply crisis that we're having at the moment, not only supply of properties for sale, but supply of properties for rent, might continue unless the government intervenes and does something to really amp up the amount of new builds and homes we're putting in place for the population. And it is causing property prices to continue to rise. Now, it's a little bit of a mixed bag across the country. In October, property prices did rise again by an average of 0.9% across Australia. We are just 0.5% off reaching the peak record of home price index in Australia, which was achieved back in April 2022. So not far off that mark. So if property prices continue to grow, which many expect they will, we will pass that peak and reach new levels of property prices in Australia. So pretty intriguing when not too long ago, people were saying there would be a significant crash. The crash may still be to come, but in the immediate future, I don't see it. And again, the reason for that is because there's just a lack of supply to keep up with the current demand and the population growth as well. So if you look at property prices in Brisbane, for example, since the start of the pandemic, property prices in Brisbane have risen 51%. That's a huge amount. It's 12% expected growth this year alone in 2023, and the NAB predicts there'll be another at least 6.5% growth in Brisbane, property prices anyway, for next year. So we expect the property prices to continue to grow. So if you're looking to buy, you may not want to put it off for too much longer because it looks like the property prices are still going to continue upwards. Rental prices as well, up a whopping almost 15%. Now that's huge. And there's no stopping that either, because as the cash rate and interest rates increase, investors who have mortgage repayments for those properties need to help pay those mortgage repayments, so they up their rents. That's what's happening anyway, and this is a good reason why I don't think the RBA should increase that cash rate in the next meeting in November, or this month, sorry. However, there is a lot of suggestions that they will increase that cash rate because the inflation's not coming down quick enough. They look at fuel prices, costs of goods, costs of building, electricity prices, rental prices. All these things are really keeping that inflation higher than the RBA's target of 2 to 3%. And that's why many are concerned that they will raise that cash rate in the next meeting this month. Now, if they do that, I don't know if it's going to work because, like I said before, if you increase that cash rate, it doesn't really hurt the people that don't have mortgages. It really just hurts the people that are vulnerable, people that are looking to buy their first home, people that are struggling to meet mortgage repayments already. And those investors too, if their interest rates go up, they'll probably pass on those increases through rental increases as well. So that's not good, obviously, for the rental market. And the rental market is in quite short supply. Now, around the country, a bit of a mixed bag for listings. We've seen a lot more listings flood the markets in the capital cities, particularly Sydney, Melbourne. However, Adelaide, Brisbane, very short. There really isn't much of an increase on this time last year as far as new properties coming to the market. There is a little bit more there in Brisbane. Up here on the Sunshine Coast, not the same story. Certainly we are seeing a lack of properties available and a big shortage of properties as well. However, the demand's decreased slightly as well. A lot more people and sales transactions happening in those capital cities compared to a lot of the regional areas around the country, with some exceptions. There are regional areas around Queensland, for example, where there is huge demand and property prices are growing quite significantly for those areas. Those are areas that would be considered affordable areas to purchase. Along the coast, north of Hervey Bay, up to Cairns, for example, a lot of those townships are increasing their population growth and demand for property there are quite strong. I speak to agents up there, and they're telling me that they've experienced quite a strong market. Here on the Sunshine Coast, and even in southeast Queensland, that regional demand has subsided slightly, but there is a lot of buyers still actively looking, and a lot of the buyers still continually tell me that they just can't find properties suitable for their needs, and there's a lack of properties coming to the market, which they're showing some frustrations about as well. So look, a lot to unpack there, guys. I hope you've enjoyed this week's market update. Check out my blog and updates at martinlutzi.com. As always, there's lots of information on there. So subscribe to my newsletter there. And if there is anything property related we can help you with, please reach out. I would love to chat.